we are going to look at Zimbabwe taxation. This one is a practical guide. I know you did taxation in college, at university, but this one now we are applying that knowledge to what really happens in organizations and in companies. So, as I said, today is just an introduction. Tomorrow we will continue and now getting into the nitty-gritties of every item. So, okay, our starting point is with the taxes. Zimbabwe has got what we term taxes. These are areas they collect tax, So what normally comes to mind, normally it's your value added tax, your VAT. So you could we could have your VAT there. Let me just probably can I number these ones? Let me number them and bring them there. So we could have your VAT, your value added tax. I think you are aware of what that is. I will just explain. I know you may be aware, but we are saying value added tax is tax charged on the sale of goods, right? When you exchange goods, you are buying goods, so we charge what we term value added tax. So it's charged at each stage of the process is charged. So if I were to buy a computer from you and I'm registered for VAT, I sell it, then I have to charge VAT. If I sell it to somebody again who's registered for VAT, that person will also charge VAT. What happens with value added tax, which is very important, it's not every company, it's not everybody who charges value added tax. Value added tax is only charged by those companies who are registered with the Zimbabwe Revenue Authority. This is very important because you are going to see when you go to terms, when you go to the Zimbra portal, where you manage these taxes, you are going to see what happens there. If the organization that you are managing or that you are working for is not registered with the Zimbra for value added tax, it means you won't have a tax yet. You won't have the value added tax yet. Right. Okay. I think I'll go deeper tomorrow. I'll go deeper because this one now you need to fully understand. I know you did it in college, but I will have to go deeper so that we've got what we term pay as you earn. Pay as you earn, or pay for short, is money charged on wages and salaries. So we are saying when any organization in Zimbabwe charging employing people, it has to withhold what we call pay as you earn. So this is a tax charged by the Zimbabwe Revenue Authority. It's actually charged by the government of Zimbabwe, but the Zimbabwe Revenue Authority is the department entrusted or assigned to collect the revenues on behalf of the government. So the Zimbabwe Revenue Authority does the collection, and of course the money is remitted to government. So your pay as you earn is money paid by employees. These are the employees who pay this money, but the employer is mandated or is required to withhold that money when they make payments to their employees. We are going to go into detail before we go to terms so that you actually appreciate how these things work. Then we have what we term income tax. This is tax charged for trading businesses and individuals, because it's not only a business like a company which can register for these things. An individual who is also doing business can also register for these things, right? So your income tax now is a tax or a corporate tax charged on the profit, the final profit that the company makes. So you see, when we do our income statement, I think you remember when we were doing our Sage Evolution, you have got your income there, you have got your expense. Okay, you have got your income, then probably you've got your cost of sales. So you've got your sales or income, you've got your cost of sales, you've got your gross profit, then you've got your expenses, then you have got a net profit, right? You've got items like your dividends and so on. But what we consider first is your profit before tax and everything else. This is what we consider. Profit before tax, before your dividends, before what, right? That's where we calculate your income tax. And I'm going to show you the nitty-gritties of how to calculate it, because what you do when you, okay, the accounting that you learned in school, we call it financial accounting, right? Financial accounting. Even when you are using Sage Evolution or any other accounting system, what you are doing is what we term financial accounting. It is what we term tax accounting, right? Tax accounting, similar to what you do in financial accounting, but there are certain items that you treat differently for income tax. Like items like your depreciation. In financial accounting, you would actually charge your depreciation, but in tax accounting, we remove depreciation. We say we disallow depreciation. Then we bring in a new expense called capital allowances. So again, we're going to see and calculate these things so that you appreciate how they work. And the other thing that you want to know is I spoke about these. Probably we may also want to talk about withholding tax. So withholding tax, I don't want you to be confused. I'm going to explain this. And probably tomorrow I think I'm going also to go deeper, because I just wanted to be shallow, but I think it's very important because you have to appreciate this besides you being just able to do returns. Now, your withholding tax, if you have got somewhere to write, it will be fine. Okay, probably I'm still going to give you, I'm going to give you this video, so it's okay. So watch it from the video. But on withholding tax, we've got a number of withholding taxes. But I want to focus on those withholding taxes, which particularly affects an organization. Because if you are working for an organization, there are certain withholding taxes that you are supposed to know, and you are supposed to know how they work. So I've got number one, withholding tax. So you've got your withholding tax on dividends, right? Right. Normally, this one happens when you are remitting the dividends, and you are supposed to withhold tax, because any income earned, I think you remember from your tax module, any income earned is supposed to be taxed. So when you are paying out dividends, you are supposed to withhold 10% of the dividends. Then you are paying that to Zimra. So this is on dividends. Really, it only affects those companies which are listed on the stock exchange. Of course, the private companies will say, probably you pay dividends, but rarely do private companies declare dividends. But for companies which are on the stock exchange, you are mandated, you are bound, because when you pay dividends, you are supposed to pay that. If a private company does pay dividends, you have to also withhold that. Then we have got what we term withholding tax on contracts, right? Okay, this is the on contracts. Let me put this. I think tomorrow we're also going to expand on this. So we're going to expand on this. We have to. We don't have a choice, because initially I just thought it was going to be minor, but I'm seeing from what I'm seeing, it's going to be something massive. You have to understand this theory thoroughly. So withholding tax on contracts, the way it works is an organization is registered with the Zimra, right? It's registered with the Zimra. It's supposed to have what we term a tax clearance. So yearly, it's supposed to get a new tax clearance. Like right now, this year, you could find Zimra. Initially, they said we're going to issue monthly tax clearances. They then changed to say we'll issue with quarterly tax clearances, but now they're saying half yearly, right? Just to reduce the administrative burden. What we are calling a tax clearance or hello? Hello, can you hear me? Hello?
Yes, sir, I can hear you.
All right. Okay. That's fine. So I was saying, I'm explaining now the withholding tax on contracts, which is the 30%, how it arises. This is arising when, okay, I'll explain the background. Zimra requires that an organization trading in Zimbabwe should actually yearly should get a tax clearance. It's just a clearance, like your clearance letter. You know, remember when you were going to school, even in college, university, you have to be cleared. If you got books or some material from the university or from the college, you have to submit them at the end of your semester or at the end of your studies. Then they clear you. So a clearance, what Zimra is saying, yearly we just have to run through your books and make sure that you are up to date in terms of returns, in terms of payments. So they will issue a tax clearance called an ITF. You hear the word ITF 263. People will normally want to use that. But basically what that is just a tax clearance from Zimra. Now, if an organization doesn't have a tax clearance, for some reasons, let's say they are having issues with the Zimra, they're not up to date with payments, returns, or whatever.
Sorry for the interruption. Nanangweta ko.
All right, okay, I see. That's fine. You okay? Because I heard people, talking in the background, so But anyway, it's okay. So I was saying, the tax clearance comes in when your books, everything is up to date, your payments, your returns, everything is sorted. If for any reason you are having issues in those areas, Zimra won't issue with the tax clearance. What that means is when you provide a service to an organization, right, or a service to government, right, and that organization is registered with the Zimra. Okay, let's say I am company A. I failed to get a tax clearance from Zimra because my tax issues are not in order. Then I do business with you, company B. You are registered with the Zimra. You will be required to get a tax clearance from me. If you don't get that tax clearance, it means the invoice I'm going to issue, when you make the payment, you are going to withhold 30% of that invoice. 30% of that invoice. Then you remit that 30% to Zimra. You will pay me the amount, my invoice amount less 30%. So this is your withholding tax on contracts. Now, the withholding tax on contracts, myself, who suffered the 30% which was withheld, I will be able to claim it when I do my income tax, right? Okay, we are going to see how these things work. So when I do my income tax, I can claim this 30%, right? That's your tax on withholding. Then we have got a withholding tax on VAT, right? Again, this one it's about a third. So it's about, let's say, about 33%. I'll just use 33% to round it off. It's about 33%, and I'll explain how this thing works. Right. This one is now on VAT. What happens now? You have got your big companies like your Delta, Zimbabwe, your Econet, Wireless. These big companies in Zimbabwe, they have been appointed Zimra agents. What that means is when they are supplied with goods and services, I supply Econet, let's say probably I supply them with something. I bill them an invoice of 100,000 and I'm charging VAT because I'm registered for VAT. Let's say I charge them VAT 20,000. So in the 100,000, there is 20,000 VAT. They are mandated to withhold a third or 33% of the 20,000. So on my payment, they are supposed just to give me my full payment. If they were not withholding the 33%, they were just supposed to give me my 100,000. But they are now going to give me my 100,000 less the 33% VAT component. So they will give me that, right, as a payment. Then myself, I will claim this 33% when I do my VAT return. You're going to see how this thing works, right? So we have got this, which when you suffer it, you claim it under income tax. Then you have got this, when you are dealing with these big companies who have been appointed Zimra agents, and because of that, they are forced to withhold this. You claim this when you do your return. Then the other tax, which is there is, let me see, we have got your presumptive, but normally presumptive affects those informal businesses, right? So I'm not going to dwell much on this one, presumptive tax. So presumptive affects most of these informal businesses, your combis, these small guys. So for organizations, normally you are not affected by that because an organization is taken to be formal. So you are not affected by presumptive taxes. They've got different rates. And for an organization, you are not affected by that. The other tax that you may want to know is capital gains. You should be familiar with this. So capital gains only arises when you talk about capital gains is when it only arises when you sell a specified asset. So specified assets, normally we are looking at buildings, commercial buildings, industrial buildings. We are also looking at when you sell your shares for those companies on the stock exchange. So you have what they term a capital gain. So you have to pay capital gain. So this is not something which is done monthly. It's not done yearly. It's not done quarterly. It only arises when there is such a transaction where you have sold an asset which requires you to pay capital gains. So capital gains, you are not dealing with that on a day-to-day basis. Under pay, so under pay, you've got your pay. You also have got aids levy as part of, which is a SATEX. You can call it a SATEX. Kamana ke tax ke pay as you earn. So you've got your aids levy. Let me just also write it there. So you've got your aids levy. It's just a levy which was established by government, again paid by employees to, AIDS used to be so, it was used to be a pandemic. I don't know if it is now a pandemic. So you've got other taxes which are paid by companies. You've got what we could term customs duty. So you've got your customs duty when you're importing. So customs duty is only coming when you're importing. So you are charged customs duty there. Let me just put a number there. So you are charged what? Customs duty. Now, we have got other taxes which have come. I'm not going to be emphasizing them. You've got a tax like sugar tax. Right? So you've got a sugar tax which is charged like your companies like your Delta, your Verun beverages. These companies which are manufacturing beverages and they put sugar in there. So if you're manufacturing, if your dairy body, as long as that company is manufacturing beverages and there is use of sugar in the manufacturing of those beverages, they are supposed to be paying what they call a sugar tax. I'm not going to emphasize. I'm just giving you this so that you appreciate. We don't know where you are going to be tomorrow. Probably you'll be at Delta or you'll be at these big companies. So you also have got what we term excise tax or excise duty. So excise duty normally it affects companies like your these tobacco companies. So you've got which one do we have? I think we have got two. We have got this big one. So these are locally manufactured products, and they are charged an excise duty. It's more like it's just left. But it's a tax. So you've got that, especially the tobacco manufacturing companies, the local tobacco manufacturing companies. And you've got other things like your mining royalties and so on. Okay, these ones, okay, you're supposed to know them, but I'm saying in managing a business, because this one's like this one, it applies to mining companies, right? So basically, what we would want you to know, these other three, these ones, okay, fine. You for the purposes of you being accomplished, you need to know them because it's not an issue of you just working for a company. You may become a consultant, so you need to know. You need to know them. Even the presumptive tax, you just need to know. I think I'm going to expand. I'm going to give more flesh on this so that you fully appreciate. But these first, your VAT, your pay and as levy, your income tax, then these withholding taxes, you are supposed to know them inside out because these are things that you work with inside each month, each period as you are managing the organization. So, right. So this one is an introduction, but I think tomorrow we are going to continue with the introduction. So you could find when you're managing I want to change the screen I'm sharing. Just want to share this one. So everything is managed via a Zimra portal. So I'm sharing the terms portal. So it's a self-service. You are doing it yourself. You're doing it yourself. So you are managing your issues there. So you'll be managing your issues. As a consultant, you as a payer of taxes. So you'll be managing. So you log in, you put in, you register first. Then once you are registered, you use your username and your password. You see. So when you log in, it may just ask you for a verification code. So when you register now, what happens is you put in an email address. You also put in a phone number, right? So from there on, you get when you try to register, you get verification codes. You have to enter a verification code which comes from Zimra. So you just need to have that. So when you enter a verification code, I just wanted to see if the verification code had come through. Yes, it has. So when I enter the verification code, I'm taken into the portal. We are going to get into the portal eventually. But as I said, I want you to be grounded on how to compute and how to do these things. So when you come here, you then select your like in this case, I'm selecting my TIN number. So there is issue of TIN number, there is issue of VAT number. We're going to talk about that. So here, that's where you manage. So using these tabs, that's where you manage your tax issues. So you're managing your tax issues using this. We are going to be going item by item so that you appreciate. You are going to see how to do returns and everything else. Then we take it up from there. So as I said, I feel today, let me just make an introduction. Then tomorrow I'm going to continue with the theory. Initially, I just thought I could scratch on the surface, but I've discovered that I have to go deeper so that you have a grounding, so that when we go to do the returns, you know where we are coming from and where we are going. So for today, I want to end here, unless you've got any questions. Hello, are you there?
Hello?
Hello, yes?
Yes, that's okay. I just wanted to ask on those type of checks. Kuti inonzi IMTT and DMTT
All right, yes.
for which?
Right. So your IM, all right, there are many taxes, like your IMMT. Your IMMT is affecting almost everybody. You know, when you transfer money, you are charged that. So it's 2%. It's 2% on every transfer or on every transaction that you are doing for USD. You know, people are feeling that is punitive. I've got a small business which I do, and it's eating my profit. If you are doing Zig, it's 1.5. I think you're aware of that. Then you have got this other type that you spoke about. Okay, yeah, for banks, you've got these other taxes which they pay, right? But maybe for our purposes, the ones which are general, which one is supposed to know inside out, I'm just going to probably highlight it. Customs duty, we can't call it a tax as such, but you just need to know, because if you work for an organization, one way or the other, they will import something. So you just need to know how it works. But this one is written off. Then this one, of course, these ones which I'm painting yellow. Okay, capital gains, I could also put capital gains there, right? Then, of course, these ones, by no means you're supposed to know them, right? So, IMMT, you just write it off because you can't recover it. You can't recover it. You can't claim it. The only way you claim it is you just write it off as an expense. You are going to see when we do this. Yeah.
Okay.
What I'm going to do tomorrow, I think I'll just list all the taxes, irrespective, because you find what Zimra does. There are certain, like some which are left out, which are particularly specific to a certain sector. You see, you could probably take like insurance companies. So it's not like common to everybody. So I'd left those ones out, but probably for completeness, I'm just going to list everything. And then I'm going to explain, because I just need to further explain those which I term very important. You are supposed to know by all means, whether you are working for a mining company or you are working for a hospital.
Okay.
Right. Are there any other questions?
Nothing so far.
Right. So I'm going just to post this video, but as I said, we just scratched on the surface. That's what we did. We didn't do,
Yeah.
okay, we did something, but I said we scratched on what? On the surface. Tomorrow we're going to go deeper.
Okay.
Yes.
Thank you.
Thank you. So I will send you this video.